Should you sell options around Tesla earnings? Today we're going to talk about whether it's a good or a bad decision. So Tesla has earnings scheduled on January 29th, 2025, which is about 8 days from when I made this video. And if you guys remember from Tesla's last earnings, the implied move was about 7.3%, and the stock moved almost 22% by the end of the day. And at the opening price, it moved almost 15%. So it moved way more than implied. If you were an option seller in this situation, you took a pretty big hit, maybe a 200% loss relative to the premium you collected, which is on the larger side of what we expect when trading earnings. Obviously, it's not the biggest loss you could take, but it's up there. And looking at historical moves for Tesla, it's not traditionally been the best sell. So maybe 4 years ago until 2 years ago, it did pretty good. But over the last couple of years, looking at this back test here, you can see implied move has just been crushed by the realized move, making it not typically something that looks great to sell. But here's the thing, right? Around earnings, we always have to remember the market tries to price in a risk premium for us to trade. There needs to be an incentive for option sellers. Otherwise, there's just going to be no liquidity here. The buyer of an option has a fixed price that they pay. The option seller is the one who's taking on the risk. And just like with any other variance risk premium trade, there's usually something embedded there for the seller. So when I take a look at this, what's the implied move for this upcoming event for Tesla? As of now, 7 days or 8 days prior to the event, it's already up at a 10% implied move. I believe this is the highest move that has been implied for Tesla. Right? Looking back here, this is the highest move in the last 4 years that has been implied for Tesla options. Right? Almost 10% here. It's 34% higher than usual. So there's been a big move. Tesla's been on an absolute rally, but now the implied move is actually increased to compensate for that. At a 10% implied move, if that was the implied move even for the last event, it takes our 200% loser down significantly to being basically like a 100% loser. So when we look at this, all of a sudden the risk reward on this trade gets a lot better. We go from a situation where last event we would have got destroyed to now it's actually just like kind of a typical loser around earnings. So even though there was a huge move last quarter, and even though the implied move is up and Tesla's moving a bunch, this actually makes sense to include as a sell in the portfolio, I believe. The implied move is big enough at this point that it makes sense to do. Now, something I must say and keep in mind here is that I don't think there's any inherently greater edge here than there would be selling vol on any other ticker. So just like you would with any other trade, you want to be sizing this appropriately, right? As we've talked about in the community, if you're part of the Discord, that 1 to 3% on the high end of risk on your account, when you stress the trade to, let's say 1.5 times the max move or 3 times the straddle price. That's kind of where you want to be landing on a trade like this, I think. So it might be too big of a trade for a lot of the portfolios out there, but if you can stomach that level of, margin requirement and variance, then I think this is one that's worth including. Now, if we talk about what the max move we should expect would be, I think you need to be stressing this to like a 25 or 30% move because it could happen. It basically happened last quarter. But even that rate, if there was a 30% move, we're realistically risking 2 times the premium we collect. So even at a 30% move, it actually shouldn't be devastating, which is, I think, what comes as a surprise to many option sellers out there when they look at a trade like this. Now, obviously, the implied move, you can see it's just gone to the moon over the last month or so. And that makes sense, just given the stock price action of Tesla. And something else I'll just throw in here is that I generally think Tesla vol is expensive right now. Like selling longer dated vol, that's a video I'll probably make after earnings if things remain elevated. But we're going to keep that separate. The reason I'm not making a video like that right now is because the earnings event is there. And so we should be trying to isolate that event and trade that prior to looking at any of this other stuff. All right, so with that being said, I think that's pretty much it for this video. I just want to make a quick thing talking about how I'm thinking through this Tesla trade. If you have any questions, leave a comment in the description. I'll probably do another analysis of it as the event becomes closer to update you on anything that's changed. And so with that being said, make sure to leave a comment on the video, like it, do what you got to do to help me out with the algo here. We're trying to grow this community here on YouTube. And I will see you in the next video. Peace out, everyone.